Welcome. Thank you for joining our webinar. I'm Margot Kennedy, and this is my business partner, Christy Brock.
Hi.
And we're both really excited to share this great investment opportunity with you. So first, a little bit of housekeeping. We want you to know that we are SEC compliant and we follow SEC guidelines. And with that in mind, we want you to know that this is not an offering. This is simply an informational webinar so that we can tell you a little bit about this property. Some of the things we're going to discuss are a little bit about us. We will talk about why self-storage is such a great asset class. Of course, we'll discuss the deal, and we'll end up telling you how to invest and how to ask us questions if you have any. Christy, you want to tell us a little bit about yourself?
Sure. Thanks, Margot. My name is Christy Brock, and I've been in real estate full time for over 20 years. I held a broker's license in California. I had a real estate and mortgage company for a number of years, and then I became a real estate investor. My family has been in real estate for many years since I was a kid, and this was an easy transition. As a real estate investor, I have raised over $11 million and I've been involved in multiple projects. Margot?
Like Christy, I have many years of real estate experience. I have partnership in over 500 doors of multifamily, and I'm general partner on 5 of those. I'm also a licensed real estate agent in the state of Maryland and have been for about 22 years. And on the commercial side, I have experience in senior housing, retail leasing, project coordination, and as a controller.
And you can see our full bios in the PPM once it's available.
So Christy, you want to tell us a little bit about the deal?
Yes. So this deal we're calling Access ACCSS. And the name of our company is wiicre, which is WIICRE. It stands for We Invest in Commercial Real Estate. And this deal for us is very exciting. This self-storage property known as All Climate Control Storage is located in Phoenix City, Alabama. And I'm just going to give a very high level talk about it right now, and we'll get into more details shortly. The property was converted from self-storage, from a furniture warehouse into self-storage in 2021. And the gentleman who currently owns it and is selling it to us did the conversion and just couldn't take it to the finish line. It's only leased up to about 30% occupancy. So we're purchasing it for $2.5 million. We're going to put some money into it, increase occupancy, hold it for a number of years, and then we'll have an exit. And that's our business plan. So it's a 20% annualized return over the 5 years at the end of the day, and we're paying an 8 pref. Self-storage is a very exciting industry, and Margot is going to tell us a little bit about why.
Yes, self-storage is great. I think first and most importantly, with coming from the multifamily world, are the 3 T's. We have no tenants, no toilets, and no termites. So that's all good and simplifies operations and management quite a bit. Also, in self-storage, the customers are what we call sticky. Customers are willing to accept rent increases. No one's going to move over $5, $6, $7, $8, $9. It's just not worth the hassle. And so they're prone to stay for a long time because it's just easier. The returns are easy to increase with automation, better management, frequent rent bumps. Like I said, it's easy to do that with these small amounts we're talking about per month. And there's opportunities to increase income with ancillary income. It's also an extremely recession resistant industry. And we'll tell you a little bit more about that a little bit further on in the presentation. So America needs self-storage. We all have been through or know someone who's been through one of the 6 Ds: divorce, death, downsizing, dislocation, disease, and disaster. And all of these things create a need for self-storage. 1 in 10 of all Americans use self-storage, whether it's for their individual use, as businesses, or just for their toys. And we all know as Americans, we keep our stuff. Whether or not we want the stuff or need the stuff, we keep our stuff.
I know I've used self-storage in the past, and it always comes at a time when, you're just in some sort of transition and you need a little extra space. Sometimes, you may have it for a year. I know people who've had self-storage for 10, 20 years and haven't seen their stuff in a long time.
Right. So the self-storage industry is over $39.5 billion annually. As I said, about 10% of households use self-storage. There are over 50,000 storage facilities in the US, and that number continues to grow. 67% of storage renters have houses. So it's not that people don't have a place to store their things because they're in an apartment. It's really something that all people need. And like I said, the amount of storage is growing every year. There's over 1.7 billion rentable square feet in the US today.
That's a lot.
It is.
This is my favorite chart.
Me too. This is one of the great things about self-storage. It is a really recession resilient industry. And you can see on this chart that over the last 4 economic downturns we've had, while the economy has gone down, as you can see in the blue line, self-storage has remained very stable and in some cases actually gone up, like in the COVID recession of 2020. So this makes it a really great asset class to be in because you don't have to worry as much about what the economy is doing and what it's going to do.
And especially right now, there's a lot of talk of, are we in a recession? Is a recession coming? If you believe a recession is coming, self-storage is a great place to have some of your assets. If you think we're not going to have a recession, hey, self-storage is still a great place to be.
Absolutely. So a lot of the expenses and income are very controllable. Expenses, you can make them lower and control things like payroll, which is one of the biggest expenses that can be reduced through automation and technology, which is part of our business plan. The utilities are low. We don't have water, sewage expense or much of it. And we can use automation to reduce electric costs. In this particular property, all of the lights are already set up so that they go on when you walk into an area and go off when you leave. So
and
that
they're all
minimizes.
all LED lights.
That's true. Right. So the turn costs are also low, unlike an apartment where you have to go in and paint, maybe fix flooring or carpet or any number of things. Basically, storage is a metal box and it can be turned in as little as an hour between customers by just sweeping up. And the maintenance overall is low. The structures are made of metal and block construction. And so that also keeps operating expenses and ratios among the lowest of all types of investments. And as I mentioned earlier, there are a lot of ways to increase income, which also increases value. And we can do that by adding customer protection plans, which are sort of like insurance. And also, we are possibly going to add some RV parking on the side of the property, which will also increase income. And there's always the possibility of selling moving supplies and products. So why this deal?
This deal. So, Margot gave you a lot of specifics about why self-storage is a great industry. So now the question is, why is this a great opportunity? This property is located in Phoenix City, Alabama, which I'll show you a map a little bit later and why that location is great. The Columbus MSA, so the Columbus, Georgia MSA is where this property is located. It's just under 27,000 net rentable square feet, and 93% of it is climate control. So it's a really great asset to have in a hot, humid climate. And it's a relatively new facility. So there's lots of really great things about it. So Phoenix City, Alabama is within Russell County. And this is it here. This is the state of Georgia. So, but all of this red area is the Columbus MSA, and Russell County is right within this MSA, and Phoenix City is the closest to Columbus, which is one of the fastest growing cities in Georgia. It's a really great location. It's also a hop, skip, and a jump from the Atlanta airport. Or if you're driving, it's only a 90-minute drive, which is really short. Margot and I did it a few times when we were there doing our due diligence. The city is the city in Russell County and Phoenix City are so close and so tied to the Columbus MSA that they actually run on Eastern Standard Time, whereas the rest of Alabama runs on Central Time. So it's a really interesting location. Where the property actually sits is at the intersection of two major highways with very good visibility, a lot of car traffic, and that's something that you want when you're talking about self-storage. You want to know how many eyeballs are just driving by. There's very good access to enter and exit the property. And most importantly, there's very little competition in the trade area. So trade area for self-storage is usually a 5 or 10 minute drive or 3 miles. So you can look at it in a couple of different ways. And for this particular property, the amount of climate control self-storage existing is 0.5 per capita, which that's extremely, extremely limited. 0.5 square feet per capita is nothing. When you're talking about non-climate control, it's 7.8, and anything under 10 represents a very good opportunity. There's only one known facility currently under development in the area, and it's only going to be 15,000 square feet, so very little competition. Margot mentioned earlier, why self-storage is great. And now we're talking about why this property is great. It fits our buy box. For every property that we underwrite, and we've underwritten over 100 this year, we always look and see, is it going to fit our buy box? Are we going to get the returns? How can we make improvements? Is there a great story? This one has a fantastic story. We have a seller who did a conversion and now has no desire to do what it needs to take to go to full lease-up mode. He's ready to exit, and we're helping him to exit in a very capital gains friendly manner. It's been poorly managed. The site opened in December of 2021 and is still sitting only at 30% occupancy. It should be fully leased up by now, but because there's no proper on-site management or no proper third-party management, no one doing marketing, no good website, all of these factors play into why it's being poorly managed. Because it's poorly managed, all of the rents are sitting well below the comps, anywhere from 3 to 30% below the comp set, depending on the unit size. And again, there's very little climate control inventory in this area. This should well be leased up. It should have been leased up this year, and it's just not. There's also a lot of low-hanging fruit. Margot mentioned earlier that there's a lot of ways to increase your income, and this property represents many of those. And we'll get into that a little bit later when we talk about our business plan for this property. Essentially, we're buying it for $2.5 million. Our all-in price is a little over 2.8. We're going to lease it up and get to a stabilized occupancy of 91%, and we should hit that by the end of year 2. Years 3 through 5 will be just holding for stabilization, and we'll sell in year 5. That's our business plan. And of course, along the way, we'll evaluate where we are and where we're going and making sure we're hitting our targets. And if we can hit our target earlier, sure, we can exit. If not, we're in for the full 5 years. And at that time, we'll see, are we hitting our target if we sell? But our plan is to sell in year 5. Lease up and management. So how do we get from this 30% occupancy to a 91% stabilized occupancy? The most important part of our picture here is bringing on our third-party manager. The company that we have engaged is the 3rd largest unmanned self-storage manager in the nation. They are really good at what they do. And they're going to come in and we're going to lease up. We're going to make sure our rents are in balance, and they focus on the remote management model, which means that instead of having a $60,000 a year payroll, we have a significantly smaller payroll because we have the remote model where an individual can lease online, they can get their codes online, everything is fully automated. They also have a major call center that operates for, I believe it's 14 or 16 hours a day. So it's just a much higher level of service available to people looking to do business with us. You can get off work at 6, 7 o'clock and you can still get someone on the phone. And that's a really great way. Being fully available to your customer is a really great way to quickly lease up. We have some property improvements that we're going to do. We have a credit that we're getting for a roof repair. We're going to refresh our concrete floors, improve signage and curb appeal. And we have a full budget for all of that work. How do we know that we're on track with this? Well, once we hit 42% occupancy, again, we're currently at 30. Once we hit 42% occupancy, then we're making enough money to cover all of our operational expenses. Once we hit 63% occupancy, then we're covering not only our operational expenses, but also our debt. So everything after 63% is pretty much pure profit. And we expect to hit that in year 2. So in year 2, we also expect to begin paying our pref, which is really nice. And again, we already talked about a lot of ways that we're going to increase our income through increasing occupancy, bringing rates up to market, and adding ancillary income like tenant protection and potentially RV or boat parking. We have a lot of opportunity with this property. We talked about our purchase price is $2.5 million. We have about $350,000 in closing costs. And so our all-in cost is just over $2.8 million. The property has 263 storage units, and we have the opportunity actually to increase that, because as we reevaluate the space, there is a lot of wasted space that could be turned into storage units on the property. There is an extra storage room that can be converted. There's the current office that can be converted. If you have a remote management system, you don't need an office. So there is the potential to do even more than what our business plan is showing. And those numbers are not included in our returns. Our sources and uses. The seller is giving us a 5-year interest-only loan with 2 one-year extensions, and that debt is at 5.75%. They're loaning us $1.75 million, and our equity raise is just over $1.1 million. We have our purchase price, we have our closing costs. This is actually a further breakdown of our numbers. We have our purchase price of 2.5. Our closing costs are actually around $40,000. We have CapEx at 145, working capital just under 80,000, and our acquisition fee for a total all-in price of just under 2.9 million. This is our 5-year pro forma, and we're happy to dig deeper into this with anyone who's interested, but we're just going to really touch high level and show you what's important here. And this year 1, this is full year 1 of operations, not our acquisition year. At the beginning of full year 1, we expect that our net income is only at about 28,000. By the end of year 5, we're up to just under 300,000. And how are we going to get there? We're going to increase income. We're going to control expenses. We're going to add our ancillary income. And that's going to take us to a significant increase in net operating income. This net operating income at a 7.25 cap corresponds to about a $4.1 million valuation, and that hits our targets and allows us to pay the 20% annualized return, our 8 pref. We have plenty of cash flow here to pay out, as you can see. So this is a really solid deal. And, we're not doing anything crazy here. We're not, building from scratch new construction, and we don't have to go through that permitting process. This is a very straightforward project. And here's the good stuff, the investor returns that we're projecting. As I've said, we plan to pay an 8 pref on this project, and we expect to be able to start paying that in year 2. So at least 2 quarters of year 2 of ownership, we expect to be able to pay our pref. And then in years 3, 4, and 5, we expect to pay our 8 pref, our full 8 pref. And in year 5, we will do a catch up of year 1 and partial year 2. Cash flow is essentially split 65-35, 65 for our LP partners and 35 for GP, and up to a 100% return. So for example, if you invest 100,000, once you have made 100,000, then all cash flow after that is going to be split 50-50. So it's definitely a very solid, return. And again, we project over a 5-year period, a 2x equity multiple. So that's doubling your money. How to invest. Margot, can you let everyone know what they need to do and who can invest?
Absolutely. So first of all, this investment is limited to accredited investors. If you're not sure whether you are one or what one is, please contact me or Christy and we can walk you through it and figure out if you are one. The minimum investment for this property is $50,000 with $5,000 increments. We expect that it's going to fill up pretty quickly, so it is going to be on a first come, first funded basis. So what that means is make a decision quickly, fund quickly, because if we do end up with being oversubscribed, priority will be given to people investing over $100,000, just because it makes things easier that way. The investment timeline. So we're looking for soft commitments now or as soon as possible. We expect the PPM to be available by October 18th. We need a hard commitment by October 27th, and we need you to fund by October 31st. So that gives us some time. Like I said, the investment access will be on a first come, first to fund basis. So again, it's important to get your money in right away. So what are the next steps? We need you to soft commit, visit our investor portal to register your soft commit, and the address is right there below. Also, you can contact one of us by setting an appointment on our Calendly link, and we'd be happy to schedule a call or a Zoom and go through some more details about the property, answer your questions, help you figure out if you're an accredited investor, and help you go through the process of getting your investment in. So we've got our 2 Calendly links there. You can also email us with your questions at investors@wiicre.com. And again, that's W2ICRE for We Invest in Commercial Real Estate.com. So thank you so much for joining us. We're really excited to have had the opportunity to share this with you, and we look forward to the opportunity to work with you in the future.
Thank you, everyone. Thanks for taking the time to watch our webinar, and we look forward to speaking with you.